Ymedia.
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 Stay tuned with Ymedia.
Ymedia is a media company. With 360-degree approach in reaching the audience over 8 media platforms. Television.
Hello and welcome to Ymedia Newsroom. I'm Ramona Singh and it is great to be here with you. There's lots to talk about when it comes to this Canada-US deal that we're all waiting for. The deadline is tomorrow. We're going to see what happens, what's going to happen to this 50% tariff that the US wants to impose on Canadian goods worth up to $20 billion. And then we also have the latest announcements for you about what's taking place between the United States and Iran and what President Trump is thinking of doing next to be able to wrap up this conflict that's been going on for most of this year. And it is a midterm year and it's not looking so good when it comes to cost of affordability. And of course, what's happening to the economy. We're going to give you the latest and a lot on business news as well today. So let's start with our top story, which all Canadians essentially want to know what's going to happen come tomorrow. The deadline was pushed for 3 days. It was initially scheduled for August 19th deadline for the 50% tariff that the President of the United States wanted to add on Canadian industries. And we know that the negotiators and our trade ministers have been dealing with negotiating back and forth on some of these items. And Canada did say ahead of schedule that if the 50% tariffs do get added, then Canada may also do their own retaliatory tariffs. So now the latest announcement will be, of course, we're not going to know everything until it's signed, the I's are dotted and the T's are crossed. But so far, what we know is that the proposed trade deal would cut U.S. steel tariffs within 4 million tons quota. This is like the top headline news that's come out of the latest news on the negotiations, as Canada and the United States have reportedly agreed in principle to a quota system for Canadian steel. So now the first 4 million tons exported annually would face a 25% U.S. tariffs, while the shipments beyond that amount would continue to face a current 50% tariff. So it's kind of a tier system, like if you're ever in sales and you need to price something out and then you have, a certain price for a tier and then the next tier has a different price. Well, it seems like that is what is taking place right now when it comes to tariffs, on more specifically on steel. And so this would reduce the duties on a large portion of Canadian steel exports, but it would not restore the tariff-free trade that was in place. So that's one of the key things here. So it's still a concession, but it sounds like there's some negotiations there. So now this is quite significant because when you have the tariff within the quota at 25% and tariff above 4 million tons is going to be 50%. So that's where things are at. And this is all under Section 232. Canada would also reportedly remove all the counter tariffs on American steel, and Ottawa would further restrict steel imports from third countries to be able to match these quotas and to keep things above board and keep the Americans happy in this case. So now Canada and the United States are separately negotiating tariff relief for aluminum, and the agreement remains prospective and has not essentially been officially finalized with the signature, which we're all going to wait for and see. Hopefully that day is tomorrow. And if they don't come to terms today, then we would assume that perhaps it would push out the talks for another few days. So now imagine if Canadian exporters could collectively ship exactly 4 million tons to the United States during the year. That's really what we're talking about. That would only qualify at the 25% tariff. And then if Canada ships another 500,000 tons of steel, then that's an additional amount that would face a 50% tariff. So it won't be inclusive. It'll be anything over that amount. So the quota applies to the volume receiving the lower tariff. It's not a hard ban on further exports is what the case is. And so this is all under the Section 232 of the US law allowing trade restrictions on national security grounds. And so Canada has responded with counter tariffs on American products before, if you do recall. And so this is a case where Canada is one of the United States' largest steel suppliers, and with the production and manufacturing supply chains closely integrated across the border. And so Canadian steel is used in American construction, vehicles, machinery, energy infrastructure. So even for those industries in the United States, they're going to have to deal with the 25% tariff increase and then the 50% thereafter for the next year. So it makes cost of doing business in the United States more expensive for the Americans as well when it comes to construction, right? So home startups, that'll be more expensive for the Americans. When it comes to vehicles, much more expensive, and so on and forth. So that's really what we're looking at so far, and we're going to see what it means on the other items. We know that what we were watching for is the contentious issue on American alcohol back in the stores, in the provincial liquor stores, and so it seems like the premiers have come to the table. Even some of them were divided on whether to return US alcohol back on the Canadian shelves. And this is coming at a time where some of the Canadian provinces have agreed to restocking American alcohol. And this is as a gesture of goodwill, while the federal negotiators are still working out to complete this deal between the United States and Canada trade agreement. So now, if you recall, the provinces removed the US products during the tariff confrontation, and that was like earlier on in this year. And since then, Prime Minister Mark Carney has asked the premiers to reverse those restrictions. I mean, in Ontario alone, there's like $80 million worth of US alcohol that was removed from the shelves, sitting in a warehouse. And I think the latest figures were that the province is paying almost like $20 million for security and costs to be able to keep it in a warehouse. So now that's going to go back on shelves. And you have Trade Minister Dominic LeBlanc that's saying that the two sides are also very close to finalizing this agreement. And then you're hearing from other premiers who have their opinions about returning alcohol back to the shelves in their provinces. It does fall under provincial territory. So Manitoba Premier Wab Kinew said that consumers should still continue to avoid purchasing American products voluntarily, even though it's going to be restocked back on the shelf in Manitoba. And that's the case when it's also about having to deal with tariffs regarding automobiles, steels, and aluminum, which is still up for discussion in terms of negotiations. But this liquor ban seemed to have been quite successful because it became a huge irritant for the Americans and actually an option to be able to put it back on the shelves. And you know what? The Premier of Manitoba is absolutely correct. He says, yeah, we'll put it back on the shelves, but it's still up to Canadians if they want to support American liquor or American products. And so that's quite a great point to make. Although there was this division that took place now in terms of putting it back on the shelves, such as the Quebec Premier. But if you recall, it was all this happened when the premiers united against American alcohol. That was back in March of 2025. And so now these two provinces that are reportedly retaining some of the restrictions is the Quebec Premier. They have not fully committed to restocking the US products. And then, as I just mentioned, the Manitoba Premier who's saying, you know what? Even if it gets back on the shelves, it's up to the consumers to decide what they want to do. And this is something that the Prime Minister had specifically asked the premiers to get on board with. And so we'll know what happens come tomorrow as the deadline approaches, and we're going to bring you the latest developments as they are unveiled. Now, when it comes to the stock market, we saw it doing quite well. And in the past little while, when it comes to this deadline of this 50% tariff, we're seeing things change. So now the North American stock has retreated as higher borrowing costs are unsettling the investors. And you're seeing this with Canadian and American stock indexes that have moved lower as investors are continuing to worry, essentially about rising government bond yields. So when it comes to oil, gold, Bitcoins and the Canadian dollar, well, they've moved higher because of those concerns. And this is something that we've been tracking throughout the week to see what's taking place. Now, also, when it comes to some of the retailers, Walmart shares have also fallen 9.2% after the company has reported its weakest quarterly US sales growth in more than 6 years. And this is a time where we went into quite detail a few days ago about the bond yields that are representing a return to investors that are demanding for lending money to governments, right? So when yields rise, then several things begin to happen, such as government pays more to borrow and fixed mortgage rates can even move higher. So companies face higher financing costs and bonds become more competitive with stocks. So investors may assign lower valuation to companies whose profits are expected to be far into the future. And this is what is taking place with Walmart. So now when the Dow's larger declines, that are suggesting essentially that there's concern extending beyond just the technology industry and the technology stocks. So when it comes to Walmart, its results are also raising questions about the strength of the consumer spending. I mean, imagine Walmart's your one-stop shop. You go in, you can purchase your groceries, your household items, clothing, literally everything that you need at Walmart, which really services families. And so when Walmart's numbers are down, that's also showing that people are not spending the way they used to. So that's quite the story when it comes to the numbers. So what it means for Canadians is that a small daily Toronto Stock Exchange decline isn't necessarily alarming, but the more important issue here is whether elevated bond yields are going to persist. So that could keep fixed mortgage rates even higher without increase in the Bank of Canada's policy rate. So that's what we're going to be watching for. And what has made things so expensive, and when it comes to inflation numbers that have gone higher, and even in Canada, the last month was inflation number was at 3%. The month prior to that, which was June's numbers, was at 2.8%. We're seeing this climb up, and really, we can all say that it has to do with one major conflict, which is the conflict that started between Israel, United States, and Iran closing off the Strait of Hormuz, choking off about 20% of the world's oil supply, has made energy costs go through the roof. You've seen that take place with even your gas prices, right? So Canada has had the gas excess tax removed, which is about 10 cents earlier this year by the Prime Minister, but that's supposed to be scheduled to go back on after Labor Day. On Labor Day. So after Labor Day, we're going to see probably another 10 cents, which is going to make things a little bit more expensive. And so that's really affected the price of food at the grocery stores. It's really affected this mass unaffordability situation that we're in. And so now it seems like the stalemate that's taking place between the United States and Iran about where are things headed. They signed an MOU, and really a few days afterwards, it was as if the MOU was not signed, and now the MOU time period of the 6 weeks is ended. And now we're looking at this war, and now you may want to call it a conflict, a war. It's been going on for almost 6 months. We're only a few days away for it to be the 6-month mark. So now the president of the United States has to figure out what to do. He started the war. And so he needs to figure out how to end this war and get out of it and get things more affordable back in the United States and in the world. And so the United States has promised unprecedented sanctions on Iran. So Washington is shifting focus from military action to economic pressure, believing that perhaps things could change. So now U.S. Treasury Secretary Scott Bessent says that the administration is preparing what it calls the toughest sanctions imposed on Iran. So if you recall, when the MOU was signed, essentially a big part of the MOU was that Iran was asking for sanctions relief and to get the money that has been frozen, the Iranian funds, released. And so now this is a response back to say that now the United States is going to have the toughest sanctions. Aside from what the sanctions are already, I guess there's going to be more tough sanctions. And that's suggesting that there's going to be more economic pressure on Iran to reduce the need for any major military operations. And so this is a time where we're hearing that the details are going to be announced by Bessent on Monday. So we're going to bring that for you live when we receive it. But the bigger picture is that you have oil that's risen at its highest level in more than 3 weeks following his comments. And then you also have Iran that's condemned the expected measures as economic terrorism. So when it comes to sanctions that could target trade, energy, and exports, you have financial networks and countries or companies dealing with Iran. And that's really the situation. We're going to take a quick break and we'll be right back.